What if I told you the entire system you're betting your future on was never designed to work in your favor? Every stock tip, every market rally, every promise of financial freedom exists inside a machine that's built to keep you chasing, not catching. Stick with me, because by the end of this video, you're going to understand exactly how the free market is rigged to keep you hoping, and why hope might be the most expensive thing you own. Look, I'm not here to tell you to give up. I'm here to show you what's really happening behind the curtain, because once you see it, you can't unsee it. And maybe, just maybe, you'll stop playing a game where the rules were written by people who never wanted you to win. Let me start with something that's going to sound crazy. In 2024, suspected wash trading on major blockchains accounted for $2.5 billion in trading volume. That's not a typo. Billion. Wash trading, for those who don't know, is when someone buys and sells the same asset over and over to fake demand and manipulate prices. It's illegal. It's also everywhere. The most active wash trader in 2024 executed over 54,000 buy and sell transactions of nearly identical amounts, 54,000 times. Think about that. Someone out there is running a script, pumping numbers, creating an illusion of value where none exists. And you're supposed to believe the market reflects reality? Here's where it gets even more interesting. 94% of decentralized exchange pools involved in suspected pump and dump schemes were dumped by the same person who created the pool. 94%. That means the guy who set up the market is the same guy who crashed it after you bought in. Decentralized finance was supposed to be the solution, right? No middlemen, no corruption, just you and the blockchain. Except it turns out the people running these so-called decentralized markets have centralized control. They create the hype, they pump the price, and then they dump it on you while you're still reading the Reddit thread about how this is the next big thing. But crypto isn't the only place this happens. Let's talk about insider trading. In the first quarter of 2025, insider selling profits increased after states mandated data breach disclosures. You heard that right. Laws designed to protect customers actually enabled insiders to profit. Because when a company gets hacked and has to report it, insiders who know about the breach before the public sell their shares, pocket the gains, and walk away clean. The SEC just obtained final judgments against a former Pfizer statistician and his partner, who made over $200,000 trading ahead of the Paxlovid announcement. They knew what was coming. You didn't. They cashed out. You bought the hype. Now, I know what you're thinking. Okay, but that's just bad actors. The system will catch them. Really? Regulators announced over 200 enforcement actions for market abuse in the first quarter, but only 114 in the second. That's a 43% drop. And here's the kicker. There were 0 fines for market abuse or insider trading in that second quarter. 0. The watchdogs aren't sleeping. They're on vacation. Let me tell you about a Telegram-based pump and dump ring in Australia. Over 3 weeks, they artificially boosted share prices 9 times, made huge profits, and then disappeared before regulators even knew what happened. 9 times. 3 weeks. And the average person watching their portfolio, they had no idea they were playing against a coordinated team with a playbook designed to steal their money. This isn't a free market. It's a casino where the dealer controls the deck and you're the only one who doesn't know the cards are marked. And then there's the Federal Reserve. After the 2008 financial crisis, the Fed held interest rates near 0 for over a decade. That's not a free market, that's a command economy. They overrode the natural forces of supply and demand to stimulate growth, bail out banks, and prop up asset prices. If you owned stocks or real estate, you made a fortune. If you were just trying to save money in a bank account, you earned nothing. The system didn't collapse, but it didn't reward prudence either. It rewarded those who were already winning. The Fed didn't save the economy. It saved the people at the top and told everyone else to keep hoping. Here's the thing most people miss. The market isn't rigged because bad people do bad things. The market is rigged because the structure itself is designed to create and sustain hope. Hope is the currency. It's what keeps retail investors buying stocks after insiders have already sold. It's what keeps people pouring money into crypto pools that were designed to collapse. It's what keeps workers believing that if they just save a little more, invest a little smarter, they'll get ahead, even though the system is programmed to extract value from them at every turn. Analyst following is supposed to suppress market manipulation by enhancing pricing efficiency. And it does, but only when paired with strong institutional ownership. Translation? The little guy doesn't have a chance unless big money is watching. If the institutions aren't in the game, you're on your own. And guess what? When they are in the game, they're not there to help you. They're there to extract every dollar they can before the price collapses. Algorithmic trading systems are now vulnerable to deepfake-driven misinformation. Imagine a fake video of a CEO announcing bankruptcy goes viral. Algorithms see it, panic sell, and crash the stock before anyone realizes it's fake. By the time the truth comes out, the damage is done. You lost money. The algorithms moved on. The people who programmed them, they're fine. They hedged, you didn't. Let me paint you a picture. Matthew and Nicholas West pleaded guilty to insider trading in the UK, profiting £42,000 from confidential broker information. Mohammed Zina, a former Goldman Sachs analyst, got 22 months in prison and had to pay over £500,000 after being found guilty of insider trading and fraud. These aren't outliers, they're symptoms. For every person caught, how many walk free? For every headline, how many silent trades happen in the shadows? The system survives because it's self-referential. China lends to Europe through the IMF. Europe lends to developing nations through the World Bank. China profits by parking foreign reserves in treasury bonds. It's a planetary game of hot potato. Everyone holds someone else's IOU. Everyone's debt is someone else's asset. And when the music stops, the people left standing aren't the ones hoping for a better future. They're the ones who designed the game. Retail investors are disproportionately affected by market manipulation. You don't have the resources. You don't have the information. You don't have the algorithms. You have hope. And the system banks on that, literally. Every time you buy a stock based on a headline, or invest in a coin based on a Reddit post, you're feeding a machine that was built to harvest your optimism. The house doesn't just win. The house is the only player who knows the rules. So what's the solution? I'm not going to tell you to stop investing. I'm not going to tell you the whole thing's a scam and you should bury your money in the backyard. But I'm going to tell you this. The free market isn't free. It's rigged to keep you hoping, keep you chasing, and keep you believing that if you just work a little harder, save a little more, or pick the right stock, you'll break through. The truth is, the game was never designed for you to win. It was designed for you to keep playing. If this video opened your eyes, hit that subscribe button, because understanding the system is the first step to not getting crushed by it. And if you want to go deeper, drop a comment. Let me know what rigged system you want me to break down next. Thanks for watching. Now go out there and stop hoping. Start knowing.